Welcome traders, and hello, I'm Stephen Hode, aka the Stop Hunter. If you're new to the channel, don't forget to hit the like button and subscribe to get more cutting edge strategy videos just like this in the future. Today we are deep diving into a world of mysterious indicators, forgotten indicators, but I've dug them out, I've put them into a Renko strategy, and I've got some pretty amazing results. And in this video we're going to go through the whole lot, and by the end you'll come away with your own working version of these strategies should you choose to put into your own trading. So with that, let's get on with it. Now let's set up the Renko charts. I'm using TradingView here. Notice at the top, no indicators or tools on the actual Renko chart, not even a moving average. Now I'm using this on crude oil, WTI, the futures contract there, using a block size of 0.25. Feel free to use other markets, it does work well on those, but I'm focusing here on the crude oil example to show you the work through from start to end. Block size wise, using 25 cents. I've also optimized that process as well, and I'm going to give you a few backtest results using different block sizes to show you the sort of results I got later in the video. So indicators, I said they were lost and mysterious. Well, the first one you'll notice is the MACD. That is certainly not lost and mysterious, it's very popular, but that is the crux of this strategy. We're using the MACD, but it's supported by these indicators below, these three below that you may or may not have heard of. Now the MACD settings is just standard stuff. We've lost the histogram and we're using the 12.26.9. You can turn that histogram off by clicking the box just there. Now the three below it, what have we actually got in our tool bag? First up, we've got the KVO, the Klinger volume oscillator. That's the guy down the bottom here. Now if you want to get that on your indicators, just type in KVO. Now these might be on other chart packages as well available, check them out. Here we're using Klinger volume oscillator KVO by this guy called H. Potter. So we've added that on. What are we actually using that for? It's actually a tool to help us confirm the strength of the trend, and if I click on that you can see the settings. I've got them set to 13, 40, 75, the long length we call that, or slow length 75, the short medium length 14, and the signal line 30, 40 I said there. So that's the KVO. Now above that we've got something called the Choppiness Index, and what does that do? Well, that helps filter out choppy market conditions and ensures we're trading in a trending environment. Now what are the key components here? Let's click on the settings again. Well, I've got it set to 10. You can mess around with the style, but notice this key yellow line here set at 45. We'll be using that. Again, go up into your indicators to find it. Just type CI as it's abbreviated to, and you can see it there. It's actually a default indicator on TradingView. And finally we got this other indicator called the Relative Vigor Index, RVI, and we're simply using this to be our trend confirmation. Looking into the variables there, set to 10. Again, just go up to the indicators, type RVI, and you will find it quite easily. Another default indicator there on TradingView. What's important, like I said, about this one is the yellow line that I've actually added on there, set at 0. So if it's above it, it's bullish. If it's below, it's as bearish. It's as simple as that. So that's our basic setup. We've got three very rare unused indicators on there, plus our traditional MACD. In combination we get a very powerful Renko strategy. So let's go through the rules now of how we get in and out of our trades. So for a long trade, it's all very simple and straightforward. We want to wait for a MACD to cross, something like that there. We then need the KVO at the bottom there to be positive, so above that yellow band. We need our Choppiness Index to be below 45, and we need the RVGI there, the Vigor Index, to be above the yellow line, above 0, to indicate a bullish trend. And as you can see from the actual WTI crude oil chart, it shot up very nicely indeed. So we need all those variables lined up. We got that one ticked, the choppiness ticked, and the KVO ticked. Once you've done that, we get into the trade, and it's exactly the opposite for a short trade. And I just want to show you a slight variation using a short trade example. Now you can see there I've marked where the MACD crosses over to the downside, and as you can see from the WTI price, it does move nicely down over the next few weeks there. But as you can see, the slight variation on this trade is you see the RVGI there, not below the 0. So sometimes I like to wait for the 4 to line up. So you can see we've got the choppiness in the price up there. But actually the trade becomes much stronger at this point here when we cross back below the 0 line there on the RVGI. The choppiness is still holding under our threshold of 45, and you can see clearly at the bottom the KVO is under the 0 line as well. So in this instance I like to wait until they all line up, so I can get into that trade in a slightly different fashion. So you can have it sort of two methods: one, they all line up at the same time, or you wait for them to line up to get into the trade. Test it on your own systems, markets, and setups that you put together for this type of strategy. Now let's take a quick look at how we would do the stop loss. Now the stop loss is it's a slightly different variation on a theme here. I back tested various methods for this strategy and found that actually having a certain multiple of the block size works quite nicely. And again, I'll show you the backtest results later for this. I'm actually using a 10 times the block size. So if we got 25 cents here, we're using a $2.50 block size. Why? Because that's going to keep us in the trade. Of monitored and looked at how the price moves in this sort of strategy, and that gives us enough breathing space to stay in the trade and get the results we wanted. Now in terms of taking profit, it's another slightly different method here. I'm going to take profit at 4 Renko blocks. So if I'm using a 25 cents, I'm looking for obviously a $1 exit point for my profit, and that's really all it is. And if the trade goes wrong, how do you get out? Exit if the trade MACD crosses back, the KVO changes direction, or the RVI moves against the trade. So like I said, it is quite simple really. It's just using indicators that do serve a purpose, that aren't very well known or talked about, but dig a bit deeper into the world's technical analysis and you can find some really good indicators out there. And I will over time put together video content around those indicators so you know a bit more about them. Love to hear from you as well if you're actually using them. Put that in the comments below the video. Be very interested to find out whether you're using them. But now let's take a quick look at some backtesting results. So here is the backtest results. It's on WTI crude oil. Remember, it was over a 1 year period. I'm using the 1 minute Renko chart. What have we got here? Now, I talked about the stop loss previously, using 10 times the block size. Now, I did use variants of that, 2 times, 5 times, 10, 20. Ran it through my backtesting machine to see what was the optimal. Also looked at different methodologies, trailing, that sort of stuff, using different indicators. Also optimized the block size, but I just thought I'd put them, some of the better block sizes out here, so you can sort of see the different impact running this sort of strategy has, how many trades you can expect to be looking for in a given day. And remember, it's just crude oil, so it might vary by market that you are trading, but it's going to give you a very good starting point and gauge. And you can see there, probably the best Renko block size was the 25 cents one. A lot of trades over 1 year, 950 trades, win rate 75%. Sharp ratios of all of them is pretty fantastic, actually, at 3.6. You will find in the channel that I'm actually going to test this in a live environment to see whether we can still generate these results, and that will all be part of my Traders Club and some more exclusive content there. Also got Kelly criterion telling us what sort of trade size, what amount we should risk on our trade. And you can see there, we're ranging across there between 3 and a bit and 2 and a bit trades per day, depending on the block size. The optimal one, 0.25 there, block size, that's about 2.6. So you're looking for 2-3 trades a day there. And as you can see, the block size obviously gets bigger the less trades that come out, ranging from 1200 down to 850, but the win rate for all of them is pretty decent as well, 70% up to 75%. So it's up to you. If you want more trades, use a smaller block size. If you don't, go up to say like 40 cents. Want something that fits in the middle, 25 cents. Totally up to you. So it's from just using and digging around into different indicators that aren't so popular, you can actually come up with some fantastic strategies. So I suppose the key takeaway here is learn your technical analysis, and you can find some pretty useful tools that are still out there, and really, like I said, got the dust growing on them because no one really talks about them. But put them together, do your own back testing, due diligence on different combinations, and you can come up with a highly effective strategy, which we've got here. This one is on, like I said, crude oil, but it works across different markets, whether that's crypto, forex, commodities, stocks. Give it a try. Works very nicely, and those unique indicators do provide a different angle onto the strategy that others aren't using. There you go. Thank you for watching. It's a powerful strategy built off of indicators you may never have come across before in your time using technical analysis. You can see hopefully now how effective they could be, and hopefully that's inspired you to go away and maybe investigate them further. If you do use them, love to hear from you. Let me know in the comments how you use those indicators. But generally, just recapping what we've done, we've taken the Renko chart on a particular market, in this instance crude oil. We've started from the basics of using the very popular MACD crossover setup there, and then we've added 3 further indicators: the Klinger, the relative vigor, the Choppiness Index, to create, in combination with MACD, a very powerful trading strategy. Like I said, use it on the crude oil, but it has worked for me on other markets. I suggest you go away and test, do your own due diligence, work out your own settings, etc., and see if this strategy can work for you. If it does, let me know in the comments. Love to hear from you there. If you liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons. All that support is much appreciated and helps the channel grow. Now, if you want to learn more about Renko, got a playlist at the end of this video you can watch. Start your journey at the beginning, work your way through, and you'll come out the other side a Renko master. And also, I mentioned the Traders Club, that we've got here on YouTube as well. If you want to find out more about that, a video for that as well coming up right now.